Good morning, all my friends out there, all one of you. Thanks for popping by for the Breakfast Club. Good morning. I'm your host, Darren Hancock, and we are here today looking at the market for October 4th, 2023. We're looking live, and we're going to do a little review. And I just want you guys to know we got to stay out of the market. Yep, it's non-farm payroll day. The markets are actually, they're performing exactly as I laid it out this week, but you can only be so fortunate hitting the marks. So I want to make sure that you guys are aware that non-farm payroll, if you're a new trader or experienced trader, NFP, like Michael says, not for professionals. Not for professionals at all, which means it's an observation sport today, tomorrow, and the rest of the day. If you got trades in, look for ways to slowly scale them out by the end of the morning, preferably the afternoon. Move your stop loss, manage your stop loss really well, and look to start closing out your trades until NFP is over. And then next week, we look for jumping right back into the market. Let's do a quick pre-market analysis or review of yesterday's. As usual, I go through all my little bits in the morning here. I have to get on my YouTube. See, I didn't even set this up. This is why you got to be organized in the morning, folks. YouTube. I'm going to get on, make sure my channel is a Microsoft third-party vendor who's using cookies. Reject them, guys. Now I want to go into ThetaWaveTrader. There I am. All right. Just little old me started about 2 minutes ago, it says. Now I want to go in. Oh, that's me talking. Oh, there's a slight delay in my voice. All right. There we are, October 4th. Okay, let's do a quick review on where we were at yesterday. So yesterday, this is the daily chart on the British pound. Remember yesterday we were talking about, I want to see just a small little candle here. I didn't want it to really do a lot of moving, kind of preferably bounce off of this guy here. Remember that discussion? And then I want to see a candle reach back into this fair value gap here. And look at that. Ding, right off of this guy here and straight back into the fair value gap. Actually hit the top of that order block right here. Let me make this a little bigger so you can see it. This isn't for bragging purposes. This is just to kind of show you that's what I wanted. That would support upside for today. And wow, do we ever get upside like early? We started off like you can see if we'd go to the hourly here, but anyway, that's what we were looking for yesterday. It called the same thing in euro dollar. Wanted the small candle and then a return into it. It was first entry would have been here and there technically, but because there's this fair value gap, you want to see that return to at least the bottom of that and not start trading through it. So we hit the bottom of it, traded into the middle of it, hit the top of it, wick through, hit that order block here, and now we've pulled back into, because this is all price imbalance in here, where there was just wicks, and we've come up to the bottom of that, and now we're sitting inside this daily fair value gap. So what I want to see is either climb up on top of this thing and start climbing up for a reversal, or we'd have to be above this. You'd have to get above this candle before I start getting excited about being a reversal. But the early support for that would be getting on top of this fair value gap here on the daily and pushing back up again. So we'd see a small one here, creating a fair value gap here. And then the next day, like Friday, you'll start to see a pop down into that gap again, that SIBI, I have to keep using the right terminology, this SIBI or inversion fair value gap now, and then start pushing for higher prices. So right now, again, we're not staying in. This is an observation sport here this morning. We are not participating in the market. We will do paper trades. We'll get all excited about paper trades if you want. But I'm not entering live. I don't suggest you do either. But hey, I'm not a financial advisor. I don't claim to be a trading professional. So do what you want. I'll be demonstrating, again, as usual, on demo account. Just doing a price read. What you do with your own accounts, what you do with your own money is entirely up to you. Yeah, that said, now let's get back to here. Markets are dangerous, man, and they can be crazy quick. Take your money. So monitor your stop loss. As you see, my style is more of a quickly get in the market, get out, sniper day trading, like sniper trading. It's not even so much day trading. It's like trading all day, but sniping. Getting your little piece out, your nibble, your little bit of cheese, and then trying to protect that as soon as you can. Get into a stress-free trade as soon as you can, and let the chips fall as they may, or where they may. Here, let me get down to the hour, so I'll stop all this babbling here. So we're looking at daily, so hourly. Look where it started off on the day. We came down into the Judas swing. That's your Judas swing right there, into London's low. It swept the low into the fair value gap. That would have been my entry right there had I been awake at 2 o'clock in the morning. If you're monitoring London, if you see this kind of run down into an old high, fair value gap, breaking a low right at an optimal time, and then catch long, oh, that would have been a beautiful trade. That's why you got to live in Greece, I think. For me, if I live in Greece, for all my Greek friends out there, Yasu Tikanis, Kalakalaisi. I don't speak Greek very well. I got a friend who speaks Greek. He's awesome at it. Anyway, this is that would be a great place to go, because you can trade London in the morning and enjoy a nice little cafe on the side of the road, over a beach, whatever, and then in the afternoon, evening, you hit New York. So you had the best of both markets. Great place to hang out. That'd be the ultimate retirement place for me, to kind of just sit back and do your trading in London, trading in New York, have dinner, spend a night out with your friends, hop on your boat, go sailing. Wouldn't that be awesome? That'd be great. Go help some people. Help some people get a better life for themselves. What a dream. What a dream that would be. Anyway, so do we get our entry? So here's this break above market structure here on the hourly. Do we come back into it? No, but we do get a fair value gap here, between here and here, and we enter in here to get long again. So an hour or so ago, I wasn't quite up yet, but that would have been another nice entry point to get into this fair value gap. Now we're starting to look at it as, is it becoming an inversion? We also have a fair value gap over here on the hourly, a SIBI. Are we going to be working inside this SIBI? Now we're going to get on top of this one, and start to slowly climb our way up out of this. So this was all the longs booking, and these guys were all shorts. So you took the shorts down, took out all the longs that had their book below market, and then we drove up, squeezed these guys, and either took out their stop losses, or especially if you didn't have a stop loss, the market reversed on you. Ouch. You're getting squeezed good now. Anyway, let's go over to euro dollar. Euro dollar, same thing. Here's the talk yesterday. We were talking about the same kind of setup that we wanted to see happen. We wanted to see a small day, range day yesterday. We wanted to see a fair value gap form between these two candles, yesterday and Monday's candle. And then we wanted to come back into that, potentially, I mentioned potentially returning to this new week opening gap, and then continuing further on the downside. Looks like we clearly have a heavy euro dollar. The American dollar still has its fair value gap on the daily and weekly that it has yet to fill, if that's its objective. And if it so does, or it does so do that, then, or so do so. Anyway, and if it does that, then we're looking for further downside here. And if it doesn't, do we have a reversal? So I want to see a good break-in structured, like a big bold candle, get through all this stuff, get on top of them, and start running back up for higher time frame premises. We don't have a lot. We have some small pockets of liquidity in terms of fair value up higher on the daily, but I don't see any instant change in sight just yet. So we're still waiting for the October or seasonal low to occur, and that could be another week or so yet, at least to near the end of next week. And then they were looking for crazy week. Crazy week is the third week of October. I've got everything written on my charts where I think I start off the year and I write things down on my chart, on my calendar, what I expect to see long term. So it's kind of a very overall vague kind of idea, and surprising how close it can be. So anyway, I'm looking for this October low. So we'll see how that pans out. It's definitely, I've got a lot of stocks, jumping on a lot of stocks, a lot of ETFs, big stocks that are running lows now. Natural gas. Look at that. This is what we're calling for, getting above here. Those of you who got gas play, I've been calling gas for, I bought gas way down here, but it's important to note that if gas starts to get above here now and we start to get a return to these old highs, keep your eye on this level. I'm going to draw a line here just so you guys know that I'm going to call this with plenty of time. Let me put this as something more significant so you can all see what I mean. So this is the kind of like the roof or the floor now. Now that we've come through this, I want to see it come back to the top of this fair value gap. Inside this, anywhere inside here would be fine. I'd like to see it just come back to these old highs and then continue to climb up. So that's the foothold. So I've put in the charts for you. Have a good look at those. That's for natural gas. If you're into any sorts of long natural gas plays, then that's kind of my long for the markets in terms of natural gas. Anyway, so catching this for a long, looking for all this stuff to potentially fill in over the next year or so. So I'm in this this is like my mega trade. I look for this consolidation here, and I found some spots here down on the lower time frames that supported this continuous run up. Now I could be wrong. Could turn around and come all the way back down and clean this whole lot out of here. What do I know? Aussie dollar. Look at that. Ate all the way through that thing, came back. It's hit the edge of the order block here, or breaker. And are we going to reject off of that, or are we going to start to push through and get on top of this fair value gap in here? So we're creating a space in here. We still have some SIBI, some down sell side inefficiency, or sell side imbalance, buy side inefficiency. So we don't have a lot of buy side back into here yet. So I'd like to see this come back, find some support at this portion here. If you pulled your fib tool from top to bottom, from here to here, 50% is at least 50% of this range, just a little bit over 50% of this midpoint here of this consequent encroachment of the SIBI. So I'd like to see at least get back into here. And then you have to decide, are we just getting back into a smaller range here to get back, or smaller consolidation to go short some more? What do we got down here on the lower end? Let's look at the weekly here. There's your rejection block. Sorry, not rejection block. There's the mean threshold of the last down close candle before run above an old high. So that there is the parent breaker of this whole range, running all the way up to the top. So this consequent encroachment, oh Lord, I keep using the wrong terms. This mean threshold, consequent encroachments are done inside SIBIs and gaps. Mean threshold, the midpoint or mean threshold of this candle, is where we had come down, tagged it, found some resistance, which is a good sign. And you want to see that start to pull off of that. If we close below this mean threshold on the daily or weekly, then chances are we're going to run this low out here, which means what the hell? Which means we could be revisiting. Oh, we've hit that one there. So if we run the lows out here, then we could be looking at the mean threshold of this candle, which is 60, around 60. So let's just wait and see if this candle holds, or are we running for the lows here. I like that little pocket, that inversion fair value gap here too. We've run through it, back through it, found some support at it nicely and left. This is a good example of eat through it, come back up through it, back down, tag it. You can see right here, we tag it nicely there, and then break out above a swing, fair value gap, there to there, trade into the fair value gap, and you continue your run up above old highs, scaling out as you go. That's the weekly candles. That's like watching what we've been talking about on the daily and the hourly and the 1 minute. If this was a 1 minute setup, it'd be the same thing as the weekly. It's fractal. Whether you buy into that belief that there's an algorithm or not, eventually you're going to come around to seeing that the markets are fractal, that this does happen on all time frames, and you'll never convince me otherwise, ever. So don't even try if you want to. Let's move down to Australia, New Zealand dollar. There's our little thing that we've been calling for a couple of days now. Look at that. Came right in there, wicked all the way through it, and right back into the range. So what have they done? They've cleaned out all of this liquidity. It's been sitting down here for days and days and days. So the last couple of weeks, there's a lot of people have been putting their stops down here to continue to push up for, who knows? I have no idea where they're pushing out for, but I do know the orders are placed on, sell side orders are placed on the top, and the buy side orders are placed on the bottom. Their stop losses are held above and below them. Each of these candles. What degree, what volume, I don't care about volume. I don't care about any of that stuff. All I know is there's orders sitting above there. So that is the place that smart money will target to free up liquidity or grab liquidity and pair it up with would-be buyers or sellers above the marketplace. So that's why we're looking for this guy down here. A small little price imbalance for the algorithm to reach down and rebalance. Came right back into the rejection block, perfectly off the rejection block. Now we're looking to get back into this range. So you're getting, there's your range. Look, get back into 50%, which would be in here somewhere. And then I don't know where it's going to go. We're assuming that it could go up now that it's run this liquidity out here. But like an Australian dollar on the weekly, it was heading down below its lows and got into this rejection block, this mean threshold here. This has not got below its old lows, so it's got a lot more strength, so it's really resisting price. So there's like an SMT divergence between Australian dollar and New Zealand dollar. New Zealand dollar seems to be the stronger currency, in that it just simply ran its lows here, not its overall lows back in August, that the Australian dollar clearly has, right? All right. So looking for upside here on the S&P 500. Midpoint. It's just hit the midpoint now. That's the hourly. Oil's continuing down. We called this days ago. As soon as we saw it break through here, that's why I was calling for more downward prices, more draws on liquidity. There's heavy draws on the weekly. So this was the call 2 days ago on Monday when I saw this breakthrough, this inversion. Creates an inversion fair value gap. What do? We get back into the midpoint of it now. So we drove down, came back up into the midpoint, stopped. Then we opened just below it and traded back perfectly to it. And this was your free fall today. This was the great entry into, there's a $3 entry right there. Almost $3. It'll be $3 by the time we get down here. So $3 free fall. You could have taken that. Not that you will, because today we don't play with non-farm payroll week. But this is the precision I've been trying to show you guys. I've been trying to tell you. When you look for inversion fair value gaps, we cut through candles. I know a lot of retail thinkers don't believe that, but you cut through candles and you look for these inversions. They are data points that the algorithm will reach for in order to extend it. So it will go back, look for its specific data points, reference, and then it will continue in the opposite direction or pair it up. I don't profess to know the ins and outs of the algorithm and how it's designed or what it's designed to do, but I do know, based on ICT's training, that it is algorithmic. It is a fractal thing, and each and every day you will get proved it. So watch ICT. Go and watch this guy. You get him till November. You have an opportunity to learn from the mentor of mentors. He is the master, this guy. He knows what he's talking about. Study his concepts. I didn't know a thing about the market 7 years ago. Didn't know even what Forex stood for. So you don't need to. If you want to learn from a guy who's a master of this stuff, study his concepts. He's got free online stuff. It doesn't cost you. He doesn't charge you. The guy's a multi-millionaire. He doesn't care about making any more money off of his stuff. He's made his fortune in the market, and obviously a small fortune to all of us who paid him for over a year. Every day. We were in the markets every morning with this guy, live, back in 2016. It was awesome. What an opportunity. Sometimes twice a day, live, watching this guy trade, talking and stuff. And 7 years later, I'm calling the market like a demon. Not like him, but like a demon. Like, whoo, boy. I can see things in the market now that I never, ever would have thought about before. And you utilize that all the way down into your stocks, bonds, treasury bills, everything. If it's all algorithmically driven, you will see it. You'll see setups, and you'll make entries into the market a lot cleaner than just, oh, my buddy told me about this, so I'm jumping in on it. I guarantee you this, if you heard about it from your buddy, it's already too late getting in. You're in a sentiment swing. Wait for a return. In other words, this is sentiment. When you get a lot of sentiment, let's say you heard about it here. People are driving this price up like crazy. You want to wait for the return, the retracement back to an area that you can get in on and start running up from. Sentiment. You see, I saw that so much in Bitcoin. Holy cow. A lot of people piling in. And then when you heard about Bitcoin, it was already too late. It either took off, everybody was running in on it. Then when the smart money got at it, you saw the crash that shortly followed after that. Let's get back to, so oil's pushing for its daily rundown. Hourly, let's look at what oil was doing. That's how it started off the day. We have a break in structure over here. We have a break in structure to the downside, break in structure to the downside. Fair value gap, come back up inside of it, right there. Bang. Just got over the edge of it, also inside a new week opening gap. New week opening gap. See how we bang around off of these prices? Key levels that open and close on them. You run back up one more time, tag into that fair value gap, and then continue the downside. When we start to eat through this, and we get a body goes through it, like we were talking about before, when it comes back to the edge of it, or even up to the middle of it. So you think about these two key areas. I don't like to see it come all the way back in, but it can come back as far as the midpoint. Here's your first 25% of that range inside that SIBI on the daily, or is that a BISI? Might be a BISI. Anyways, the fair value gap on the daily, we come back, tag it, and then we start aiming for lower, our higher time frame objectives lower. So we come back, you come in, midpoint again, then it finally drives through. So for here, your objective would have been, if you're in there, you're scaling out a portion here. And then you're scaling out. If there's another one further back there, you look for that. Those are your scale out points. And then for me, when you start to see these kind of run down like this, and they're still getting supportive candles, the moment you start to see a gap forming on the opposite side, you start to go, oh, this is a potential reversal. Like if you constantly keep seeing these SIBIs on one side and then you see a BISI on the opposite side, the first BISI I see on the opposite side is usually my hint that we're reversing direction. Here's an example. Down, 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 down. Here's your BISI reversal. And again, we're not saying a complete reversal and changing direction, of changing the market direction, but usually that signals a run back into a range, your 50% of your range for, or more, for regathering their orders and going short again. So here's the, we're banging off the bottom of that one now. So now we've got another one further down. So this returned to the midpoint of that fair value gap again. So you could get short on that there. Stop loss goes above the candle that supports it above. And then you continue to see that price work its way back down into our objective, which is, it would be right there today. We're a non-farm payroll. So yes, you can still call it. Yes, you can still see opens But like we said, if you had a position on, that would be the place to get your position, at least 80% of your position off. Move your stop loss now to break even, or at least if you're up here, your stop loss, I'd have my stop loss sitting down here. So you're well in profit for the last 20%. Take your 80% off here and sit on the sidelines. Morning, my friend. How's it going, Kevin? How is things so far? Sorry, I didn't see I just saw your message now. How's it going, buddy? Oops. YouTube. What the heck? Where did my thing go? Sorry, I just lost my my YouTube thing, my channel here. Let me get back on here. There we are, we're live. All right. Going great. Great London session. Yeah, wasn't that awesome? You got a silver bullet off of it? Good for you, bro. Traded the euro for a big run up and passed the 100K prop firm phase 2. Good man. Now I have to wait for live account login information. Said it can take 72 hours. Well, hey, glad to hear that, man. Seems like Euro and GBP will be looking for shorts. Good for you, man. Good for you. Look at that. Prop firm, hey? Funded. Way to go. Good for you. That is, I'm really happy for you. I really am. That is excellent day. Excellent, excellent. 100% for you. Okay. Six. There we go. All right. Now we're back in action here. Making sure that we got everything up to snuff. All right. Where is my... Sorry, I'm still looking at my channel here. It's kind of lagging behind. Let me see if I can get this. There we go. Okay, I have to make 0.5%, so $500, and then wait 14 days to get the refund. I have to make 0.5%, so $500, and then wait 14 days to get the refund. Ah, okay, so you still have to kind of, well, now that you're funded, you have to get at least another $500, and then within the next 14 days, you're gonna get your refund back. Okay, so then after that, what percentage do they give you for your money? Do they give you 80% of your profits? 50%? What do they end up giving you? Also passed by 150 top set account last night as well. Good for you, man. There you go. You're going to be able to give up this whole corrections officer thing and be this mega millionaire trader sitting on the sidelines, waking up every morning having a chat with me. Or you'll be on your boat with your fancy Wi-Fi doing some trades. I signed up and it was 88.5%. They constantly change the amounts. Yeah, of course they do. Yeah, Michael's not, he sees a lot of prop firm stuff. Has been, a lot of it's kind of a hoax. So I hope it's not for you. I hope everything works out really, really well. I like to try and find the positive in that. And I hope that they continue to feed you, my friend. That's good. I'm glad for you, Kevin. That's excellent. The constantly changing of this will be so I don't have to work overtime. So you don't have to work overtime. Well, it's going to get to the point where you're going to have too much money. You're going to tell the warden, hey, look, buddy, I'm taking over. I can't afford to risk these fingers and my typing keys. Collecting my millions off my keyboard. I think I'm going to take your job. I'm the new warden now. Oh, that's great. I'm happy for you, man. So this morning we're kind of talking about the market analysis. I don't know how soon you came in and what you heard, but this was remember we were talking yesterday about we wanted a little small candle to form yesterday, and then we wanted it to come back into that range. Well, it did. It had the small candle bounced right off of the fair value gap on the daily and continue to run all the way back into the range that we were calling for yesterday. So far everything's kind of worked out fine. Now, do we get a continuation on a downside? So what I want to see is something come down here, come back up, find some support here, and continue pushing down for the rest of this. So I'd pretty much be aiming for this, but because it's non-farm payroll week, you've collected your money, stand on the sidelines, high five yourself, have a coffee, take a deep breath and go, I passed, man. Good for you. Or do what you want, whatever. That would be my advice. It's NFP week. We're going to sit back and kind of paper trade the rest of this day. And so we had the same thing happen on euro. We were calling for this. We wanted a fair value gap to form with a small this high yesterday, and it did. And now we've got to punch back into the midpoint of it so we could continue driving back up to the bottom. We're calling for this. Remember, we're saying that it could run back up to the weekly new week opening gap. There's a small little price imbalance right there, which is the midpoint of the new week opening gap. So if we do get upside, that's a potential upside run. This 50% may be all we need for a further downside. Again, we don't know, so we have to look for lower time frame structures that support either a downside or an upside run. For $450, I figured I would give it a shot, worth the risk for the moment. I get my refund back, then it's all good. That's perfect. Then you trade. Then it's stress-free trading, right? Then it's like, all right, now I've got to do is maintain a consistent set of rules that supports a funded account, that I don't now suddenly go blowing my funded account, taking all the time it took you to get there just to blow it now on crazy ass choices. So yeah, perfect. Get your refund back. All you've invested is time for something you enjoy doing. It's a win-win scenario, right? Natural gas. This is the natural gas play I was talking about. Remember, we wanted to see it get above here. There's your natural gas run. So I want to see it get on top of this line here, this support line now. Get some traction on top of that weekly fair value gap. Climb on top of that. Step up, and continue running up for the rest of the winter, and hopefully into the new year. Yep. Get the refund and stress-free for the profits. Hopefully just keep the same mindset. Yeah. And, you're doing extremely, extremely well for your early entry into this whole ICT concepts. You've been doing this for 2 months, and now you've got a funded account. God bless you, man. Oh, 2 months in for me, I was burning live money like it was going out of style. I was doing all the wrong things. So I'm glad you've got more maturity to follow through and follow the rules. That's why you're corrections officer, right? Follow the rules, man. Good for you. Open the account September 3rd. So a month later, slow long trading, no home runs, just little nibbles. There you go. Eat the cheese, brother. And here you are feasting. You finally get a chance to sit at the buffet table with the rest of them. And munch away. Good for you. That is how you do it. All those other people who are watching this. Oh, look, we got somebody new in here. Who are you? Say hello. Pop in and say hello. There's a little conversation chart on the side. You'll see if you look on the side of the chart. You'll see us having a little chat here. Pop in, say hello. Who are you, strange person who has arrived? Yeah, so good for you. My buddy Kevin here in New Jersey, from New Jersey, has hit his first funded account. Bless you, man. I'm so happy for you. That's excellent. That's what we want to see here at the Breakfast Club. We want to hear success, man. We want to hear success stories. We want to see these people making it. Shout out to Kevin. Good work, brother. Keep the winning streak alive. Yes, indeed. You get a heart for that. Ping, 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 ping. I love it. Love it, love it, love it. Anyway, let's get back to the charts. So, and we have a mysterious third person that has joined our group. Yay. We got 3 people now. I love it. So let's talk about what else is going on. So this was the gas play that I was talking about. We want to get on top of that. Again, the week, get on top of here. In terms of our inversion, we want this to become an inversion fair value gap now on the weekly. Get on top of here and then look for the next step up, which is this whole inversion gap. It will be an inversion gap if we get on top of it again. We've already ran into it. Look at that. Nice. Body breaks through it, comes back into it, all the way to the top, then continued to run down below these old lows here. Now we're finally getting a breakout above these equal highs. We just popped above it right here, and then we could have just returned back into the range and continued saying, well, we've swept the liquidity up there. Now we're going to come back into the range again, but we haven't. We've swept back inside that weekly fair value gap. We've just hit the edge of it. Now I want to see it pop up, drive. Give me some drive here. Get on top of it. And then I want to see some force. Some big, bold candles now during the winter months start pushing up for higher prices. Australian dollar again. Aussie dollar was in a consolidation, broke below its old lows. Here's the important thing to recognize. Aussie dollars the week or two of the two. See how it's August lows were taken out here? Now we got the New Zealand's August lows were not taken out yet. We just get a drive below all the liquidity that's sitting down in here on the daily. Look at all those days. We're getting tons of liquidity building up in there. A lot of retail people believe that was the floor. While we drove through it, took them all out, back to a price imbalance and a rejection block. Right off that rejection block, we're pulled back in. So now we're inside this range again. Again, are we pulling back up higher? I'd like to see this push through here, come back on top of it, and then again start the step up. I like looking for simple setups, which are the steps. You know, there's multiple ways. I've got a few ways that I like to enter the market, but this is the most common way. I will show you in the Breakfast Club. Every morning we'll be looking for these types of setups to run back up. Also with 8 o'clock happening right now, we're going to move to the S&P 500 and look for our first silver bullet entry. Not that we're going to take an entry today. We're just going to, well, I'm just going to sit back and watch. So look at this. Have a nice little drive down. What are we aiming for here for the, there you go. There's the weekly. We've got above it. Now, do we come back, find support at this? There's little imbalances down in here. Let me get back into one that looks like without all that stuff on it. Looking at this range, I like this piece right here. 62%, right on the money. So that's the fair value gap. I want to see it return to 62%. A nice little discount range inside that weekly fair value gap, which is now an inversion gap. That would be nice to try to hit right off of that. Anywhere inside here would be an entry to go long. We have a breaking structure to the upside, bold candles. There's a first fair value gap, but I like, you look, when you see this kind of stuff, you say, well, where would be a discount? We could key off of this order, this propulsion candle here, and then continue running up. I like to say, well, you know what? If I'm in this range, I want to get a discount. I want to get 50% or more for smart money to come back to run up. May not get it. You may just have this order block here, and then the continuation on the upside. I like to say, well, give me a discount. I can get on to start aiming for higher objectives. You'll be scaling out a portion here, here, so on and so forth. So does this order block propulsion candle hold price? Or are we going to run back down to a little deeper discount? Ideally, I'd like to see this stay open. That would be the rejection, or I speak sometimes too quickly. That would be the breakaway gap. So just come back and tag the edge of it, leave that open, and then continue on the upside. Again, not actually making a trade today, sitting on the sidelines, paper trading till this non-farm payroll, rest of the non-farm payroll week is over. We're just kind of reading price, looking at price action right now, and seeing what we get. What's tech doing? Tech daily is in a consolidation. Look at this spot here for your hourly. That range on tech is probably, oops, not quite 50%. Order blocks here at 62%. So keep an eye on that range here and see what happens, what you see here. So I like looking for there's a feasible place for it to run to. Oh, it's already hit there. Just hit there now. Go back here. Let's get down into the minute. There's the gap down here. They ran into that. Now we're finding support here, turning around and coming back down for a deeper discount. Or does that order block we talked about on the hourly, that propulsion candle, is that hold price, and we start pushing for higher prices here? GBP as well. 5-minute euro to the downside, very, very gap formed. Here's our drive. Push through here to get into here. Let's look at this on the hourly. 5-minute, you said? Oh yeah, breaking structure, body, candle, wick. So we could get this return into here now. I like that. If this stays open, if we can get below, how far into our daily are we? Are we just bouncing off of this to go back up, or are we coming back into here? on the higher time frame. And GPP as well. 5 minute. Yeah. See, now I like this one. I like this. See how it's lining up evenly with the daily fair value gap? That's a key spot. We ran through it, came back up, found support at it, came all the way back through it. So what I'd like to see is it come back up just inside this now. Use this as the key off area as an inversion. Come back up, hit it, and then start running all these lows here. So this candle, as it ends in 2 minutes, the next candle you want to see come back up and enter into here, or at least here. But I want to see here. But all you may see is just it tag the edge here and then continue running down. Little gap down in here. That's an actual gap in price. No buy side or sell side delivery at all. We actually gapped up in price. So the algo is going to look to reach back into there and refill that later. So keep your eye on, we got some good little learning experiences here today to look for. Look for price to support here, here, and here. So we've got multiple kind of confluences that say, here's a good place to provide some stability. I wouldn't want to see this whole thing close in. I'd like to see that just come up, maybe the fill of this, which is the halfway point of that. I wouldn't want to see that whole fair value gap fill in. So we'll see what this ends up like in the next few minutes. There's your fair value gap. Now, does it stop here and take off? That's the first one. And then the next one is here. See how it lines up so perfectly? These are key points, folks. It's almost like a voodoo thing, hey? Hit it, we start to move away from it. Now, that doesn't mean to say it's going to continue. It may just turn around now and come back up, run back into that little inversion fair value gap now that we've got through it, come back into it, or get a nice little short on inside here, right above that wick threshold, consequent encroachment, and then your high. I promise I'm not looking at future stuff just because it's turned around and now moving up like I just said it would do. Does not mean that I possess any control over the markets. It's just usually when you watch price enough, there's an area since we saw sensitivity, it came back off, and then I guarantee you go into a 30-second chart, you would have seen something hit a small little PD array inside here, reverse, and start to extend. There's smaller fractals that are occurring way inside this thing, right down into the second chart. So again, we're back to the edge. We've just wicked into the bod, into that inversion gap. We'll see where the body ends up. 12 minutes. So I'm going to put a little thing here. Right here. So that's the hourly, or was that the 5 minute? 5 minute fair value gap with the SIBI. And we have a small little one inside here, which happens to line up with the midpoint of that. So I'm just boxing that in as anywhere inside there would be my paper trade to go short. Stop loss would be up here. Where's our first objective? Down here. Then here. For quick, you're just snapping out some quick pips. Now this, in this case, it's not handles, they're pips. So if you do load on here, you're looking at midpoint. That's 18 pips. And then 22 pips, and so on and so forth. And if anybody wants me to kind of look at anything else on the charts you're interested in, just kind of type it in on the sidelines there, let me know, and I'll go over it and we can have a look at that as well. So we'll see what Euro's doing. Euro finally got into there. You see that? Opened up. It just came in and just tagged the edge of it. That's an entry. Second entry would be the midpoint. Third here, stop loss there. So there's your first entry. Again, not that you would actually take it today, but I like this area here. We have a break-in structure, fair value gap, return to there, getting support. And we called this before we went over to GBP. So amongst all the crap that's going on in the markets in the world right now, I have no idea of all the fundamental stuff that affects price. Right? No idea. All I know is algorithmically, if this is what the setups are typically, this is what you should see. So first objective right there. I know it's small. It's like, it's 7 pips, 8 pips. As soon as it breaks that low, bang, there. Now I'd move to break even. So I'd take that out of there now, I'd put it right here. So you're guaranteed some money out of that. Next objective, take a piece off there. And right now you are precision entry and you're up 11 pips already. So you've taken out a portion here, next one is down here. There's no fair value gaps or anything in there, so you want to kind of just look for this next little swing point. Now, I like to bug my friend about this. He's a real fundamental kind of guy. And I go, okay, tell me, what was the fundamental entry right here? What fundamentals told you that was the entry point? And if you can't tell me, then there's so much complexity to fundamentals. So much. And I'm not saying it's wrong. I said there's so much complexity. You got one expert saying one thing and another expert saying another thing. Same, I guess, with it. I guess you could argue that same thing for the technical analysis. You got the retail analysts that with their Bollinger Bands and MACD convergence and Elliott waves and all that other stuff, saying, "Oh, it's here. We're due for a turn. Hey, if that works, great." I'm of the algorithmic theory, specific algorithmic price points that make sense, that you key off of and go short or long. Now, it makes it sound like I could call the market like this every single day, every single time, but when you're looking for specific setups that follow specific rules that the algorithm continues to show, then it only makes sense to me that as long as you trust those rules, enter them, you get like my buddy in New Jersey in the house. He is funded, man, and he's not doing it because, hey, man, I'm a good guesser. I guess really well. He's not a good guesser. That gets him funded. He got there because he's following the rules. He's following simple techniques as set out by ICT. And he's built himself a funded account. New Jersey, buddy. Yep. Kevin, I'm so happy for you, man. That is awesome. Awesome. So he's funded. Guy's 2 months into trading, learning ICT stuff. He's got his setup. That's his bread and butter setup for life. And the man is hauling in ducats. He's getting his shekels, as they were. So good for him. I love it. That's what I want to see. I want to see people here at the Breakfast Club celebrating their successes. And those of you who are not quite successful yet, haven't made it, welcome. We're going to help you, show you the way, man. And help you get your thing. Help you get your mojo. We'll all be moving to New Jersey where all the rich people are. London, my silver bullet only. Let's go. Yes. You see, that's the power of working night shift, brother. That's you feel it now, right? Now you know why working night shifts, when you've got a little spare time, all the bad guys are in bed, they're sleeping, they're in their cells, you got a little time where you can look around at the markets and you see that beautiful setup that occurred in, what was that, in Euro you got your trade, you said? Euro, yeah, you got the Euro 5 minute. I think you said you got the Euro. So you see how we're kind of we're banging off of this low end of the fair value gap. That's why we pay the trader little pieces, move to break even. It's a zero stress trade, man. It's a zero stress trade. If it trades back against you, who cares? You nibble a little piece off. They're nickels and dimes, depends on your leverage. You put fat leverage on that, you just made $100 or whatever in 7 pips. One handle would have been $70. I don't know about you, but that pays for coffee here in Canada. And if that's $70 American, well, you just paid your mortgage in Canada with that $70 American. Let me tell you, you guys, our Canadian dollar sucks against your American dollar. So I don't know about you. If you want to trip over a $70 bill and just ignore it and wait for something else, go for it. But that would have been a $70 hit just right there. Bang. Collecting, paying the trader. Pay the trader. Michael's probably going, okay, Darren, you're paying the trader a little too early. Because he's probably like, oh, it's coming here. And he's got absolute certainty it's going to make it there. Then that's great. That's why he's the man. He's the GOAT. And no, he doesn't want to be called the GOAT, but he's the best trader I've ever seen. But I'm biased, see, because I didn't know anything about trading. I didn't know who was good and who wasn't. All I met is this guy back in 2016, and holy crap, the man walks his talk, that's for sure. Nibble, get you funded. Yes, it is. Picking it up. Nibble, that's it. Nibbling will get you funded. I like that. That'll be that'll be our slogan for the day. All right, here it is. That's from my buddy in New Jersey. Jersey. baby. Nibbling gets you funded in Jersey. That's my boy. Yeah. Way to go, man. Kevin is in the house. Okay, here we go. So we're still looking for down. Now, so what's my little piece? I'd be looking for this down in here now. I'd be nibbling another little piece off there because it's a low. Nibble another piece off here, here, and leave a piece on at the end. If you're down about 80% or so, look for down here. Look for each one of these little pockets. And see, what we've just set up here is a perfect entry. You are probably a drawdown of, you know, the entry is right there off of that candle. That candle's high is 0.498. This one here is 0.4983. So 3 pipettes. Sorry, it was not precise enough for those of you who said that's not precise. That's 3 pipettes away in drawdown. Yeah, sorry about that. My bad. So there's your entry with precision, and you unloaded portion. Now you just took another portion off here. So if you're taking 10% off of here, that's 7 pips. There's another 12 pips at another 10%. Your break even. Actually, I would take my stop loss here now and I'd do this. Just because I want to pay for my trade. I just move it to the top of this thing here like that. Not that you should do this, but this anyway. That's my commission right there. So now this doesn't cost me anything for the trade. I've made my 10%, my 20%, potentially more as I go, and my commission's covered. In really volatile environment, this is with the cheese. This is my buddy in Jersey. This is how he does it, man. Nibbling. He's a nibbler. I don't know if he wants me to call him that, but my buddy Kevin's a nibbler. He's a nibbler. Stoked, man. Winning trades every day. All it takes is one to get into the fair value gap that made the void, or make it valid. Those pipettes were freebies. They were indeed, my friend. You get a little hard on that one. I agree. They weren't 3 pipettes. They were free pipettes. Yeah, I like it. So look for, again, return to here. Do we get support at this? Just popping into that fair value gap is all you need sometimes. Now, given this, let's kind of look at some of the logic behind it here. What you normally would have to do is you'd have to take the point at the low of that fair value gap, and then you calculate your leverage on your account. So if you want to risk no more than 1% inside 3 trades, you would literally take the calculation from here to here, and you'd say that is 13 pips. What would be a 13 pip stop loss that calculates how much leverage would I use for 13 pip stop loss? Now, if you've got a 13 pip stop loss and you're scaling out in a few pips, you're not really making a 1-to-1 ratio here, are you? So then your decision is, do I wait for a 1-to-1? Do I wait for 13 pips before I get that? Or do I start taking a little piece out, move my stop loss to break even? Because if you see it break this low, chances are we're going to continue down. You could get a complete run back up. I always like to make sure you pay the trade or something. But anyway, you calculate that. You say, what is so if I've got 3 of them, what is 1/3 of 1% of my leverage? That would be my first entry, second entry, third entry. Now, the way I like to do it, at least the way I've designed my bot is designed to go calculate 1/3 of the, it calculates the distance from here to here, drops an entry in here, then calculates 1/3, or calculates 1/3 of, if I was going to do 1%, the other third there. So it's actually going to put more leverage on and more leverage on. So I get more leverage the closer I get to my fair value gap. So I'm only risking overall 1% for all three, but in turn I will get I'll get 1% in, but I'll get a higher leverage the closer I get to my stop loss, as it were, right? So the closer I get to the stop loss, the more leverage I can use for a maximum of 1% of my account. So if it does hit there and turn around, I get maximum profits the further I get away. And if you get these things, yeah, I didn't get a full 1% on there. You wouldn't risk a full 1% there. You kind of feather it in. So you get 1/3 of your 1% you'd be loading on, but you're taking out a portion here and a portion here. Again, this is how my buddy in New Jersey did this. This is how the nibbler, the grand nibbler from Jersey, how he's got himself some funded account, because he just nibbles these little pieces. Now, I'm not saying he's doing it here, but he's taking his profits, he's paying the trader, and he's managing his account. 2 months in, folks, 2 months in, and Kevin's got himself a funded account because he's cautious and manages his account and follows the frickin' rules. All right? So, where are we at here now? Look, we want to see some precision entries today, man. Look at this. We're at 14 pips already. So, there's already, that was 13 there. Here's 14 there. I usually aim for 10 to 15. Once it hits 10, I'm hovering the mouse over the closed trades. Oh, good. So that's a high frequency trader who takes 10 pips. I don't know if you guys ever saw the video where Michael talks about, he kind of scale. He's got that high frequency trading where he does 10 pips, 10 pips, 10 pips, and just keeps hauling out 10 pips at a time. That's a high frequency trading. If that's what you're doing, man, good for you. I usually aim for that. No need for home runs. I took a month from when I bought it to this morning. 100%. 100%. 100%. Oh, well. Looks like we lost our trader, our extra guy. Now, does it come back, find support at this? Now, this is the time where you can get this big run right up, and now we finally get a bigger entry back in here. Or are we just going to hit that little fair value gap once again with precision and then leave it? Try to take only one trade per session, so 2 per day. I think Thursday we did 3 trades. Thought which was big for me. I like a little slower pace. Hey, nothing wrong with that, man. Nothing wrong with the slower pace. As long as you find your setup, you don't want to just keep trading 100 times in a day. You find your setup. This is the setup for the day. If you take your 10 pips out or your 15 pips out and you come back the next day, you do the same thing again. This is a great example of as you nibble your way into profit, into profitability. Now you stick with that and you don't change that mindset. You keep that trading strategy that has proven you to the point where you now become profitable, or you now move into a live trading account. And you keep that and say, this is what got me here. This is what a lot of people kind of lose the focus. They start getting brave, or you start getting cocky, or you can see, almost imagine, not that you're going to do this, but you can almost imagine how some people, their confidence level starts to grow so much, they start to risk a bit more, they take more bolder challenges in areas that say, hey man, this wasn't my setup, I didn't do this is not how I got here. I was the little cheese. I was the guy in the corner nibbling on cheese. I'd grab my piece and I'd move to the sidelines. Yeah, you got the big hunters. They are out there hauling in the elk and stuff. You say, I don't mind. I'm just taking my little piece of cheese. And you slowly, insidiously continue to do that. It's the slow and steady wins the race, right? And that's the kind of mindset you've got. And if 2 trades a day is your discipline, stick to it. Absolutely stick to it, and slowly creep that little trade account to where you got it. Keep that long term. And your mascot's a piece of cheese or a little mouse, man, nibbling away. Have it on your side of your computer. Remind you that this is how I got here. And never forget your origins of what got you there. Because in the end, if everything goes to shit, you go back to what you know, where you find success. And that's what successful people do, right? That's when you get your name in lights on the Breakfast Club. New Jersey. So this kind of helps to reinforce the same principle we just talked about, right? Where you nibble little pieces down below these levels. So we got here, we aim for there. So we got 3 different, 30% of our trade is off now. Now we're breaking above order block. Now does this create a new little fair value gap here? And we start to push back up. This is what I was mentioning before about when you're going in this direction and when you start to see a SIBI in the opposite direction, that may be your signal to watch out for reversal. So if we got this SIBI, you see a BISI on the other side, think, oh, this could be a reversal direction. BISI, nothing. BISI, nothing. BISI, SIBI. Back into fair value gap. Then it continues. We have nothing there. We have a SIBI here. Reversal to you're still inside this one here. Inversion. Reversal again. Here's the opposite direction again. Change. So if you're going up here like this and you've been scaling out, you come back down and you realize I'm inside here and a body broke through here and it now creates a SIBI. Get out of that. Whatever long trade you're in now, we have a break in structure. And we've had our inversion fair value gap form. We ate through it. A body, you go, now I'm out. That body closes there. The rest of those trades are closed out. If you're trailing them up, that's how I would stop mine right there. So that's kind of like a reversal idea for me to say, all right, I'm out. That first little hint here that we're changing direction, that's what I look for. So here I would have scaled out. I close out my trades. Boop. Hit that. You're out. This looks like it's running up higher now. And if you would have left this on here and you think, oh, I'm just going to keep waiting for this down here. Your stop loss is up here. You were in profits for a bit. Now you're like, oh, I'm about to go underwater again. Now you have to sweat being underwater. See, that's the first thing. I look at this thing and I go, oh, you broke through that body. You came back, you tagged it. That's my hint that this is changing to come back into this area here. They're key levels. They're data points that you got to think, if I was going to slowly creep myself back up, how would I do it? Where would I find my steps to keep climbing? So that's how I kind of look at it, as does it find support and continue down, or does it get through it, come back, find support, start to run back up again, jumping above PD array 1, 2, 3. We're through the body of the threshold of this order block. We came back, we just tagged the edge of it. We come back, we're into the body, into the thing, or into the threshold. So we've gone through 3 PD arrays already. So that tells me that we got more upside. When you go through 3 at one time, for me, as just me, if I get through 3 PD arrays in one candle and one run, I lose interest in my downside or whatever objective I had. Because now you're saying, you've got another goal in mind. Well, what's the next PD array above me? Right here. Well, now I go into here and I start pulling my fib tool. And I know I'm a bit fib nuts here, but my next PD array is here. So you could do one of two things. One, now that you've taken closed off all your trades here, yeah, that's exactly what I'm thinking. So if you shorted again, you could go say, look, we took money out here. We closed off our trade, so we're in profit 100%. We made some money out of that, right? Small piece, but we took some. We sniped some money out. We ate some cheese. And now you can go, now I'm going to go back and do the same thing again with my initial risk. I haven't lost anything. I've actually gained something, and I'm just waiting to start my trade all over again. You could look at it that way by saying as soon as it enters into that fair value gap again, I drop another quarter or a third of percent there, third there, and a third there for 1% of my account. Not that we're doing that today, but start your trade over again. You're already in profit. Now you say, have I still reached for lower time frame objectives? Well, let's take our fib tool and say, what part of this big range have we already visited? Let me just get this out of the way here and do it the other way. Look at that, almost 62% retracement into this bigger range. So we've come back into a discount. Are we going to push all the way up now higher? So again, look at your higher time frame premise. Say, what's my directional bias for the day? Keep focusing on remembering what your bias is long term, because if you get hooked up in this whole one direction and it's opposite to what your initial run was for the day, all you've worked on is the retracement, and now you've got beat up in the main run of the day. So if our upside objective is for higher prices, you just nibbled a little piece out while the market was setting up to run against you. Right? So always keep in mind, whether you write it on the side of your computer, down today, up today, what's your direction? And know when to change that mind when you look for breaks in structure and so on and so forth. So that's your potential short, is right there. And now we're making some relative equal lows here. There's a pool of liquidity sitting down in here. Now we're popping in again. So this time I want to see it run up into here. There's your next one. So here, we've made some money off of that one. So let's pretend right in here. Actually, we'll go to the midpoint. I like the midpoint of this one here. And then that guy right there. So you have 1, 2, 3. So you see how this inversion fair value gap, look at the sensitivity at that area. There to there. Boom. And we're not talking pipettes here. We're talking precision, I bet. The high, 4999. Love that number, 999. High, 4998. 1 pipette short. Did you miss your trade because of 1 pipette short? Didn't quite make it. Ugh, my precision sucks. I'm still out a pipette or two. So I said I was going to wait for here, didn't get it. But I pointed out this one here, this one here. So you still got 1, 2, 3, 4. It may not be finished there yet. With the fib retracement tool, does it matter if you go from the top to the bottom or the bottom to the top? Well, it does for me, and here's the reason why. If I'm retracing back into this big range here, I want to pull it from the bottom to the top because this counts how far down into the range I want to come. If I pull it from the other way, if I go from top to bottom, look at the difference. I don't see what the percentage is. All I know is 50% here, and I don't know what it is here because I pulled the fib in the wrong direction. This is to pull the fib in a run back. So for here, this from the top to the bottom, because I'm running back up, there's my 62%, there's my 50. That's the range I'm looking for to go short. So I'm looking for inside this range, I'm looking for discount and premium. So if I'm looking inside there, I have to pull from the bottom to the top. And if I'm pulling from, and if I'm looking at this one and I'm tucking all the way back down again, I want to pull from bottom to the top. That lets me know my range because that's the range I'm looking for. So that's why anyway, that's how I do it. It's just, it gives me a better idea of where my optimum trade entries are going to be for a long, to get back up into that premium range again. If I'm smart money and I want to think like smart money all the time, right? I want to think like the big boys. I want to get in here and where am I going to offset? Where am I going to look for discount prices? Anything below 50% or more is a discount. So that's what I'm aiming for in here, to offload to higher prices. Buy it short, sell it high. Okay, gotcha. So kind of matters, but not really. Yeah, exactly. It doesn't really matter. It's just easier for me to find the optimum trade entries because that 50 and 62% are so common, so freaking common inside a range. Because essentially, that's what the algorithm's doing. It's offering price to would-be sellers and would-be buyers. These guys are selling it at a premium, buying it back at lower prices. These guys are buying it at lower prices, selling back higher prices. That's how that works. So stop loss goes above. What am I aiming for? That first little pocket right there. I would take out from here. I would take out a small portion. I'd nibble some chunks right there, right at the bottom of that daily fair value gap. It's 9 pips. Because it can turn around and come back up again. And it's also inside that little tiny fair value gap here on the 5-minute. This is where sniping is precise, because if it turns against you, you want to say, what PD array are they reaching for here? Again, back to my little fib tool here. If this is my new little high and my low, 62% right on the money. Look at that right there. Boop. Right there. Hit it. Now, you take a portion off right there because that's the fill. Got it? That's why Mr. Fib Tool, when you're looking at PD arrays, so you take your portion off there, move my stop loss to break even now, zero stress trade. And I've taken, what was that, 10 pips out of there? 10 pips out. Take 10 pips out of your trade and you're at zero stress. Does that make sense? And we're not looking for silver bullet entries here. We're already late in the silver bullet entry day. Silver bullet was, let's look at 1700. Here's your big silver bullet entry right there. It finally comes back into it. I guess that was our silver bullet right there. We made some money off of it. You take your 10 pips or so. So we did get a silver bullet this morning. Yeah, good for us. Yeah, it's right there. And then we're getting another silver bullet entry here. Offload portion there. Looking for the next one down here. So tempting, hey? Should we make the trades today, even though we can find setups? And kind of a, I think Michael talks about today saying, stay out of the books, stay out of the ocean this afternoon. It's going to get choppy. Well, we're just finding little crumbs on the floor. We're picking them up 10, 12 pips at a time. So you think about this run we had from here to here. We had that 7, then we had a 12. We wouldn't have got this one. But the moment we see this, we're out. So we close off the rest of our trades. There's 7. So overall, you're averaging between 7 and 12 pips on your first one. Then, if you come back in at the exact same spot we entered in before, you took out another 7 pips here, and you're looking for a piece here, and you're still at break even. So we've been through 2 trades. We've had 3 exits, 4 exits, and 2 trades. And we're looking for this low right here. Or, okay, PD array. Let's go PD array to PD array. We went through this one. Next PD array is here and here. If we lose the threshold, which is what we just hit, if we lose that threshold, we're going for this low. And we're going for these equal lows down here. And look at this guy down here. That's where I kind of goes for an overall objective that we would kind of play mocking, saying Michael said, oh, I'm going here. I know it's going down here. I fully believe it's going down here. So if he believes it's going there, my mock Michael moment. Now see how this breakdown, does this provide support? See how it kicked off of there? Does that create a fair value gap for us? Right back to the order block. So we're between this guy and this guy right now. We've come all the way down. Threshold, coming back up. Low, open, threshold, close, fair value gap. There's a few PD arrays above us. Then we can compress, get smaller and smaller. Then we have to break out, up or down. Right? We're through 1, 2, rebalance price all the way back up to that candle there. How many silver bullets can be in the hour? Oh, brother, we can find silver bullets. Depends on how many seconds. Do you want to go down to the second chart and see how many there are? There's a mucho. There are bullets everywhere. The wolf, the alpha wolf. Fear the werewolf. You need a lot of bullets for silver bullets for the werewolf, my friend. That's why I call the bot the werewolf, the alpha wolf. It's called the hedge wolf. It used to be called the werewolf. And that's because I added a hedge feature in here. And that's just basically buying and selling both sides of the market. So I hit this hedge button, it will buy and sell both sides of the market, and we'll set stop losses. And as soon as one stop loss is hit, I got this off a buddy of mine named Steve. He came up with the idea of putting a hedge on either side and a stop loss on either side. So as soon as the stop loss is hit on one side, the other stop loss slams up against it, and then we continue on in whatever direction the markets end up going. But you got to get ready to catch a news event for something like that. This is for news event trading. When you think, bam, it's going to take off. If it rips through one thing, it will grab the stop loss from below and run with it. So you'll take a loss on one side, but the other side will slam right up against it, and you'll be instantly in profit. That's the theory behind hedging. You can't do it on all things, because if it just bounces up, takes your stop loss, bounces down, takes that stop loss, you've taken hits on both sides. It has to be a news event, and about 3 minutes before a news event, before it finally takes off. The hint is, or the difficulty is trying to figure out where to put your stop loss so that it doesn't get taken out prematurely before the news event. And some brokers won't let you load in before a news event anyway. Like that might be one of your trade rules, right? One of your trade rules in your brokerage firm is you can't trade news events, or up to 3 minutes before a news event. All right, let's go see over here. Where were we looking at for here? Was this the one we were looking at for a fair value gap? We pulled back into here, British pound, and we slowly came down. Scale, scale, scale out here, and we'll leave a piece on for here. I'm able to hold trades over the week, and I'm able to hold trades over the weekend. But I try not to hold more than an hour. Yeah, you know what? Smart, especially in this kind of environment, this kind of market. Holding trades over a weekend is playing Russian roulette. My personal opinion, not that I'm saying you're a bad trader or anything like that, but you're playing Russian roulette with yourself, because I've seen black swan events where it just goes within 2 minutes, it drops 800 pips in 2 minutes. Back in 2017, when the British pound did the rundown, holy cow, it was literally 2 minutes, 800 pips, and it gaps down. And the thing is if your stop loss is sitting, for example, if your stop loss is sitting right here, and you probably know this already, but if your stop loss is sitting here, like this, and it goes up, and then all of a sudden it gaps down to here, and that prints its first price down here, you pay, your stop loss is here, not here. You get hit with all this. And with black swan events, and when do they usually do a black swan event? You got a major American market. When do you want to catch it sleeping? On a Sunday, over a weekend, when the American markets are closed. If you're going to gap down, frickin', you're going to black swan this, you're going to catch all those American traders off guard. So carrying trades over weekends is a risk. Again, it's a rare moment, but even on a Sunday, if it opens and gaps up or gaps down, and then that gap down is below your stop loss, that's where you instantly, where that price prints on the opening, is where you lose. So not only do you use your stop loss, you lose a bigger stop loss from the gap down, which I'm sure you're already aware of. But that's the Russian roulette, right? You spin the chamber and hope that she doesn't gap down on you. If she gaps up on you, and that's your open, and it's above your take profit, well then the opposite is true as well. You make money, more money, on the opposite end. So the other thing I'm saying, my friend, is be careful when you hold your trades over the weekend. Unless you're doing mega trades, like I hold my my natural gas day after day after day. I don't trade it on here because what does our little chart say for natural gas? Natural gas, not silver, euro, aluminum, these are all nickel. Do I even have natural gas in here? Oh, I don't. So if I want to go long in oil, that's 49, man. You hold that day after day after day, and you make 49.34. I don't know if that's percent or not, but that's a nice chunk of your initial investment, and it's triple on Wednesdays. So you're holding that over the weekend, that's great. If you're sure that you're going up on the long haul, you're making money, that'll pay for itself in not too long. Look at this one here, nickel. You hold long on nickel, every day you're losing 480. That's a huge hit. If you're short on nickel, you can make your commission back, but what's the spread look like on that? Who knows? Anyway, that's swaps. He said, I don't even like to carry a trade into the next session. If I do, it means my silver bullet was very strong. Or my profit target was far away, was far out. Yeah, nothing wrong with that, man, because if you have a if you have a situation where you're in a trade, let's say we would have got in on this one this morning, right here, and you are looking to hold this over to the next session or to tomorrow. You're in this, your objective is down here, or you want to take this old low out. You got in on your trade, your stop loss is here. The moment we break that low, I move to stop loss to break even. Take a chunk out, 20% or something like that, and you leave it to continue on, and you wait for tomorrow. If it reaches there for tomorrow, not only will you continue making your profits, you're also going to make, on a short euro dollar, you're going to make 3.21. And today you'll get triple. You'll get triple on a Wednesday. So that's like if they charge you for, assuming that you'll hold it over the weekend, they charge you for your weekend on a Wednesday, not on a Friday, because you got too many opportunities on Friday to change your mind, so they nail you on Wednesday. Okay, but you make a piece on the swap as well. That's why I liked Euro. Euro was great to short because you made money on it. Because I used to try to carry these things over into the next session or the next day. There's nothing wrong with carrying your trade on and on. If you think it's going to reach down in here and you still have confluences that support price to go lower, then by all means keep it, especially if you've got a swap that's going to pay you at the end of the day. See how it's kind of waffling right here over this fair value gap on the daily? And when I see all this kind of waffling, I'm out. So from there, we got down into this threshold. We came back up, close the candle into the rejection block. And now we're back down to, where do I go now? We have, oh, we did break above here. So now we got this threshold. Are we going to eat through here? Rejection block, rejection block, rejection block. Now we're getting smaller and smaller, like I was mentioning. And then we're going to compress. Then it's got to break out somewhere. We got to get an expansion here. And see how it's bouncing off of these key level. So I tell you, this is an algorithmic price point. The algorithm runs out of little PD arrays. Now it has to expand to a higher data point further back in time. Gold, triple bottom on the 1 hour. Gold. We said 1835. Never got back up there. Fair value gap. We didn't even get a chance to get back on right in here. Yeah. See how that downside magnets on these draws on liquidity, higher time frame monthly and weekly candles, huge draws on liquidity. There's an ETF we have here in Canada that has really good return on investment as a gold ETF, but I'm not touching that thing until I see some reversal happening here on the daily. If I see a reversal and we see this low, look at this, just a plummet in gold prices now. So we're over $100 already this week, and or in the last week. 1, 2, 3, 4, 5, 6, 7 days. We've had a $100 drop, and we still have big draws on liquidity on the downside. And yes, look at this pool of liquidity here, and we got further downside. So I still see gold still dropping down into this monthly fair value gap, and then we're looking for, are we going to get a bounce off of here, or are we going to drive through to a new monthly fair value gap? Looking at the huge range that we're in, that's the range. 62% fills this fair value gap on the monthly. So 62% on a monthly range. So over the last year, we've seen this, and we're coming back into a, if you're looking at taking gold higher, look at these triple highs up here. If you're looking to get gold above 2,077 bucks, we want to get down into a discount order block. There's a 75% right off that order block. 79% is right off the top of the body of the candle. Inside the weekly fair value gap, monthly fair value gap, there's a lot of confluences that support price coming down at least into 62%, because now we've already gone through the 50 and we're still boldly charging down here. So next objective for me is inside the monthly, inside that 62% retracement, look for this, which would fill the rest of that gap in. We could hit that, turn around and drive prices up above these equal highs. There's no way in hell they're leaving those untouched. I'm telling you, they're just not doing it. So they're going to come back in to get a discount. Are they going to drop below these triple lows here? I'm not seeing that initially. I'm looking for here and here. So we'll know when we lose the threshold of this candle right here that they're going to take that out. Or if you take, here's an idea for you, because Michael likes to do these kind of things too. The threshold of this massive 1, 2, 3, 4, 5, 6, 7-month order block. If that was a 7-month candle, you add the bodies together, not the wicks, but the bodies together, and look where the confluence is. Right around the 62% of this, the fill of this fair value gap here. So even if that was the threshold that we're expecting it to come down overall in a 7-month candle, if you had a 7-month candle chart, that's what you'd be looking at, order block there, come back into the threshold of it to go higher. So I'm still looking at this area to be some measure of resistance. I would love to see price run below these lows, fill this, and then book it up. Then this is what I'm looking at. So I'm just going to make sure this has been noted here on the internet live so that I can look back in a year or two and say, do you remember when I said back in October of 2023 that I was expecting prices to go higher in gold? Not that this is the be all end all here, but I'm just playing. Right there. So if we get this as the new price leg up from here, where do we expect gold prices to go? 22.52. That's the price leg up. So let that be noted here and now, that if we come back 2 years from now, or a year from now, or whatever, sometime next year, and we're looking at gold prices, and for some reason I say 22.50, you'll know why, as my upside objective. You heard it right here, 2023, October 4th, where I think it's going to go, where my overall prediction is for higher if this holds price. If we suddenly see this, and we see we see this monthly candle here, fair value gap, we get into it, out of it, on top of it, and start running. As soon as we run that open, or that close right there, that threshold, that's my objective for gold. That's what I'm saying long term. So if I was treating this like a 1-minute candle, $2.25 would be where I'm aiming for. If that was a 1 minute. Anyway, that's my idea, or my way of thinking this through. Not that that's an absolute certainty, but right now I want to see this. In order for that to come, OBS is disconnecting. What? Did I lose you? did I lose you there? It says I lost you for a second. Triple super advanced, way more than my dinky silver bullet stuff. Hey man, your little dinky silver bullet just got you a funded account. It just got you a funded account. In the house! It funded in Jersey! That's what it did. Here we go. Look at there's your run up into our upside objectives. Stop losses here for this one. I said I would have got in here, so here's my first entry. Second entry. So if you did get in here, you're now underwater. I'm underwater on my paper trade. Your second entry is there. Stop loss is here. Can see in here, you find again. Okay, good. Yeah, I got a warning saying that my streaming got disconnected and it was trying to reconnect. So there might be a slight gap in my thing. I hope it wasn't in my presentation of the advanced oil or advanced gold prices assessment. Did you get all that gold assessment stuff, or did it disconnect and I've been talking to myself for a while? I can see and hear you fine again. Yeah, did you hear what I was mentioning about gold? Did that make sense? No, you only went silent for less than a few seconds. I got it all. Okay, perfect. Perfect. All right, so Kevin, see how we're inside this inversion gap now? And we're inside this fair value gap. Stop loss is here, so if we break this one, it's going to take us out. That's what I love about this. Here's your order block right there. You see that? Body broke above it. As soon as we break through that high there, that validates this as an order block. We get above it. Look, this candle opens. What does it do? It comes back and it tags the top. It's data points. Bing, and leaves. It doesn't just randomly go somewhere. It comes back to a data point, hits our data point, then starts heading up for higher prices. Now, here's what we want to kind of keep in mind here. This, because we're doing paper trades, it's not costing us anything, and we get to do some hindsight. Well, not hindsight, this will be trading it live, but when you're looking at this, if we lose that midpoint and we start to drive all the way up like this, it doesn't bode well for a short. I want to see that stay open. So that would be so in this case, it was a breakaway gap reaching for lower prices. That's when we support. That's our silver bullet entry. We get our 5 pips, 10 pips, whatever it is that we're aiming for. We get it out, move to break even. We nibbled out some stuff there. We proved it worked. Then we got in here again and we nibbled out a piece here and it worked. It came right back into the threshold of that order block perfectly, hit it. That's not a random place. That is a point of reference. It's a data point, and then took off. So here we get above this candle here. We start to go, does this candle now supply support price? When we get above it, there's a little pop up there. That validates it as an order block now. Its threshold becomes important. There's the threshold. You wick through to a higher time frame premise. Also fair value gap again. We retouched it, so now we broke through it. It now becomes an inversion gap. Come back, tag it, and we start to drive up for higher prices. So again, all micro stuff, but they're key points of data. They enter and they hit key levels. Even though we're seeing it on a 5-minute, we're still seeing precision. These aren't just random wicks going to random places. They are still hitting key areas of liquidity and key areas of data point. Run above, come back, tag it. Now we're running up into here. So now when we lose this halfway point, now if this doesn't hold price and we start to get through it, I'd close out that stop loss. So these two would be at a loss. Just because as soon as the body starts to break through here, we already wanted this to be a breakaway gap. And now we've lost the breakaway gap. It's not a breakaway gap anymore. It was here, but now it's not. So now we start to go, are we going to start getting on top of this now and start driving up for higher prices? What was my higher time frame premise? This is what I was mentioning back down in here. What were we aiming for? Were we in a little retracement where we lucked out and got a little bit of money, and now it's tracing back against us because we'd predicted earlier in the day that it was going to go higher? That's why you got to know your higher time frame premise, because you can get caught up in these and go, oh yeah, I'm just chasing these ranges over and over again. Nothing wrong with that strategy. If you're a range chaser, as soon as I see a range form, then I'm going to pull my fib tool, look for 50%, aim for that, get out. 62%, close that out, leave 10% on for the run for the rest. Optimum trade entry, nothing wrong with that. Or am I still trying to trade overall on my daily objective or my hourly objective? Again, different strategies, different trading styles. We've come right up to the second entry, so I would have my second entry in here. Now here's how I look at this. When I see my second entry kick in here, I would now say, I don't need to see price get above here again. So for me, I want to think about protecting my thing. So I'm not going to wait for stop losses to get back up here. We've hit that entry and we pulled away from it. If we start to run through it again, I close out the trade. So this guy takes almost neutral loss. This guy takes a minimal loss versus them both taking losses up here. Because then it tells me that, hey, when I hit that point, I should see it react and come back down. Not do this. Right now I'd be out. I close that all out. Just because it's hit the data, it has hit the point. There's no reason for it to come back through here again and keep retapping it. Hit it and quit it, right? You want to see price hit off that data point, really quickly react off of it and come back down. Like this. Comes back up, hits a key point right here, data point, and quits and takes off right away. Back to another data point down in here. So once we hit that, I don't want to see it come back there. If it comes, I'm out. That one's neutral. That one's a smaller loss versus now we're expecting this to get hit up here. Yeah, the wicks can do the damage, but it's not a rule that I like to play. Does that make sense to you? Not only went silent for 5 minutes, so many different models he teaches. Yeah, absolutely. He says he's got like 81 different entries, and he's only taught 30 or something. Or 21. So you see how that point there, that's why, here's an example of why that guy got neutralized right there. And you're getting squeezed now. So if it reaches up here, we'll pretend that we still kept that on. Stop loss is right here. We're getting squeezed now. And we're getting proof that this data point is not holding. We knew that the breakaway gap wasn't being supported the moment we started wicking into it. Like, I don't like the fact that we're wicking in that already. Then we hit the data point and say, okay, now I want to see it really pull away. And it didn't. And you go, if it comes back up to that top again, I'm out. Because now all of a sudden it's pushing through that point. And this is the sniping thing. This may turn around and come all the way back down. But not before it runs this guy out here. Then you had a full loss on that guy and a full loss on that guy versus neutral on that guy and a very minimal loss on that guy, just because it's not doing what you want it to do. So when you watch it closely enough, you start to look for kickoff here now. I want to see that really run down. Came down good. Keep coming. Keep coming. Oh, no, you're waffling now. Oh, you're working back up. Get out. As soon as it hits that high, out. Now, it may not even come back up here. It may just come into here, which is the body may respect the top of this one and come back down. I don't think so, but Now you want to look at this as support. So I take this thing here. Now we're getting a body above it. It becomes an inversion. Right? Now you want to see it come back down on top of this and start reaching for here. It can reach into this guy here, midpoint. Now, if you're getting squeezed like this, you may go, oh, I hope it doesn't take me out. I'm going to let my stop loss sit there, and if it takes me out, it takes me out. I'm okay with that because you take a loss. But if you decide, oh, you know what, if this can manage to make it back to the top of this as my exit to get out, that's what I'm hoping for before it takes my stop loss. There, it would have, the spread would have opened up and taken your stop loss right there. So that's hopefully you get to see the example about why I look at that and go, oh, that doesn't look, I'm losing strength. The moment that gap it starts to close in, I start to lose faith in it actually working. It hits it. There's your my line in the sand is right there. You hit it, now get away. The moment it opens and starts coming back up, I'm out. I want to see it go. Shoot down, leave town, not this. So that's why we got out early and made neutral, a little bit of loss. Now you just got squeezed and your stop loss was taken. Right there. So now you say, okay, so now I got the direction, if you got the direction wrong. So we made money multiple times here, right, Kevin? So we hit this a couple of times, made a bunch of money in here, and then we went short here and short here. And then this whole thing happened and we said, I'm out. That guy was neutral, nullified, and the distance between here and here was my loss. 3 pips. Well, we made 7 there, we made 7 there, we made 12 there, we made another 7 or 12 there. So, in the end, I only lost 3 pips. Make sense? That's what I did. Hit it and quit it and wait for the next trading session. In and out, 10 to 15 pips. On to the next session. Repeat. Rinse and repeat. Oh yeah, hearts for that one. Yeah, man. Absolutely. I agree. So you're looking for a turn that back into here now to provide support. If we're looking at our overall objective, look at this here. 62%. Come back, find some support here. We have a break in structure above a fair value gap. Find some support. I want this to be the breakaway gap now. Let this be the breakaway gap. This would be nice if this just came back to 50, stopped here, then created a fair value gap right there, and then came back down, tagged this, and then left. How's that? This is the breakaway gap. This stays open. That's what you want to see. That's what you want to start seeing your eyes. So you're going to say, I want to see this starting to form here. If I'm reading it properly, I want to see it stop on 50, or run back, tag it. That's where you get long there. Stop loss goes at the bottom of that fair value gap, because if this thing starts to get eaten through, same principle that we talked about here going up, we're wrong. It may come back down. But we're coming back inside that upside fair value gap daily. Two more minutes, see what happens here. Does that hold? Little tiny gap, silver bullet entry. Off we run. Is 50% a key data point? Look at it. Look at it. It hit it. It does. It's on the second chart. It's bouncing around and tight. It's little PD arrays inside there, zipping back and forth. All this little bouncing you're seeing is it running to PD arrays on a lower time frame. That 50% data point entry place is at a key level. Yes, it is. Now, does it hold? Is the question. Yep. But didn't lose any pips because just the first initial trade, and that's all. Good. Good for you. SB to run higher. SB to run higher. SB. What's SB? SB? Sorry, I don't know what SB is. So 1 more minute. We've got our fair value gap. Oh, silver bullet to run higher. Yeah. Silver bullet. So you see how we're calling this, and we want that piece to stay open. It's doing exactly what we wanted it to do. Because if you watch it enough, you're going to see this open now, and now is just the silver bullet to go higher. So we made some pips today on paper pips. That's all right. And you made some money. You got your funded account in New Jersey. Not New Jersey. Is it Jersey or New Jersey? I don't know. I'm sorry. I don't know my American history. I'm from England. We're still kind of upset you guys took over. I'm sorry. That whole Boston thing, the tea party, throwing all that tea in the harbor. What a waste of tea. At least if you're going to put milk in there, we'll warm it up later. Like, come on. All right, so there's our fair value gap. That's exactly what we wanted to form. It said New Jersey. Okay, New Jersey. There's 62%. So that's exactly what we called for. We wanted that to stay open. Now, do we get to come back to it and get in on it? Or are we going to hit this objective? I'm about an hour drive from New York. You know what? My wife wants to take me to New York. She says, "You will love New York. You will love it." I was in an hour east of Philadelphia. Philly! Yeah, she said, go to New York. You got to go to New York because you got to go to a Broadway show, because I did acting at the University of Winnipeg. And that was my major back in the day before I went into paramedics and firefighting and all that other stuff. I had a dream of being an actor. So she said, you got to go to New York. New York is an amazing place to go and look at some Broadway shows. Matthew Broderick, she loves that guy. She says, you got to go there. I was down in New York, 1991, 1992, somewhere around there. I was in Westchester, met a girl on a boat, went to Westchester, quit my job, drove all the way to New York. 2 weeks, I was driving all the way back to Kansas City to meet my buddy to go on a boys' road trip. Didn't last 2 weeks. But anyway, that was my experience of New York. She says it's great. I want to get there. So I'm sure you got ideas of some great places to go in New York City. Now we do get that 70% optimum trade entry and go higher. Or do we go even higher? Yeah, so we're not getting our thing here. So we're looking at this area as my drawn liquidity now, right? If we don't take that drawn liquidity out, you can come back into here, get your silver bullet entry to go higher. If you don't get it, you don't get it. You know, it's got its marching. It's got its marching orders. It's running. It's got its orders here. It's running up here. So here's where we were talking about how it can turn against you. you nibbled inside this, because if you understand your PD arrays really, really well, you could nibble little pieces off there. And those people who are aiming for here and waiting for the here and waiting for these old lows, you never got them. And had you not paid yourself, like I keep trying to harp here, you pay yourself, and any opportunity where you see a PD array get hit, you nibble a piece off for yourself. You take some cheese, and then you move yourself to break even if you're doing these quick trades. We're on the 5-minute time frame here, man. This is not for the faint of heart. This is for people who really understand their PD arrays if you want to get in and out really, really quickly. If not, if you don't understand them really well and you don't know where to pull your fib, you can get this kind of shit happening where it reverses and totally takes all of these trades that you had in here, they were taken out up there. So if you put all 3 trades in here and they went out, you were like, well, that was a waste of time. I picked that wrong. Well, no, you had multiple times to get in and out here because the PD arrays were lining up. Does that make sense? Does that make sense to you, Kevin? At least you made it there for even a short time. Yeah. Yeah, I was there. I was going down there to get my, I was seeing her, and I was going to get a job in New York as a paramedic, firefighter, either one. And that was right before 9/11. So I was ill-fated not to be there. I was fated not to be at a job because some guy offered me a job in Connecticut. Because I even went out as far as Connecticut, applied for a job at they call it Laidlaw. I guess Laidlaw was the main service that runs the med something or other. They were running the ambulance services out there, and the guy says, like, I totally took, yep, I'll take you. What do I have to do? And I said, well, you have to sponsor me for, like, you had to be responsible for me for 5 years or something like that. There was an American, the way the immigration worked was like, you have to be responsible for this guy. You have to sponsor him. And this guy was like, I don't know you. He says, I'm not going to sponsor you. And so 2 weeks later, I'm heading back out to Kansas City to meet up with my buddy, Ray. Here we're starting to get our pullback now. It says order block, propulsion candle, order block, hold, or do we finally dip into here? I want to see it let go. Come back into here, get off on our silver bullet, run back up here. Where would a stop loss go? Right down here. Is it worth it? If you're looking to get in here, stop loss here, that's 8 pips, and we're looking to go for 15 pips. 2 to 1. Do you want 2 to 1? I don't know. Yeah, I'm following. Okay, good. Sometimes I just babble on and on and on, and nobody's there to interrupt me. Yeah, when you get your mic, let me know, and I'll give you the actual Breakfast Club entry thing here. The club is open. There's no one. The other guys don't even come to the club anymore, which is fine. I'll close it out. They don't turn up. No big deal. So you can have access to that, and you won't have to worry about typing all the time. You can just talk away if you're interested. If not, that's fine too. That will hopefully turn into an exclusive club later on down the line, because you can't have 1,000 people chatting away in one box. So I'll keep my early people in there. So we have order block. We have the moment we break above it, we come back, find support at it. Do we continue pushing up? Do we come back to the next PD array, which is the top of it, the threshold of it? Or do we lose that and come back down into reaching for lower objective? They're missing out on free money and education. That's what I say. That's what I say. What's our hit rate? You've been keeping track, haven't you? I don't know what our hit rate is. It's got to be like 8 or 9. Even with all these little trades today, there must have been 1, 2. There was 2 good entries that we had, and at least 3 or 4 exits today. So I don't know if that gives us increases our ratio. We just use 2 more. So we had 6 to 1 the other day, 7 to 1. Not that I care about ratios. It doesn't really matter. 9 to 1, I believe. Thank you, sir. 9's my favorite number. I like 9. So this was just paper trading today, but look, man, this is what reading PD arrays is all about. My boy's funded here in New Jersey. New Jersey! The nibbler from the New Jersey. He got it, and we're making pips, man. We're making pips, making money. Not that I'm recommending that people follow and put live money into this. Hell no. We're just playing. We're just showing you how to read the market as best I can. Anyway, I don't profess to be any major professional at this, but the more you understand what it is that I'm looking at, from basic PD array to PD array, I look literally when I practice my charts and I scroll all the way back like this and I click one freaking bar at a time. I'm looking PD array I study each PD array, where that freaking price is bouncing off of, what specific entry it's keying off of, and that's how I study. And then I say, what PD array am I reaching for below the market? I put my line in there, and then I click the bar again, and I double check to see if I'm right. Then I double check to see if I'm right, and I double check, and I keep doing that over and over with every freaking minute of every candle of every day when I'm practicing. Obviously, I'm not doing it every day, but you know what I'm saying. That's how I practice, and hopefully you're starting to see that practice gets you some pretty... I'm sorry I was out by 3 pipettes and 1 pipette here. I apologize for that. But you can get some pretty precise entries. If you count the paper trades, 11-0, yes. Waiting for the login info too. Said it could be up to 72 hours, so I don't assume I'll get them till Sunday. So can start the new week off with a live account. Ah, man, I'm so happy for you. I love to hear people making it, man. It fills my heart with joy. There, I'm going to give you more hearts. I feel the hearts. I feel it with joy, man. Yes, 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 indeed. Next PD array right there. So this is what I look for when I'm looking at that candle and I'm about to click that button for one step forward. I'm looking at that saying, now if I was going to reach back, that's my next PD array, threshold, or back here. And you wait, you click and you say, where did it go? There, 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 or there. So those are specific places I want to see this candle end up. And when you get more precise, when you do more practicing later, you'll start dividing wicks up. And you start to say, where does wicks provide support? That's more advanced type thinking. You'll look at specific returns to a PD array inside of a inversion gap, wicks inside inversion gaps. When they trade back to them, they're almost like a, what do you call it? Lock cinched, lock in stone kind of, I don't know what that, I can't remember the actual terminology for it is, but it's a rock solid trade. So this kind of stuff here, you go, okay, Darren, didn't quite hit that. What did it hit precisely? Then I start to look through and go, oh, did it hit there? No. Oh, look at this inversion gap right there. Ting. Now some people go, yeah, you're just form fitting it now. If you draw your inversion gaps and you look and you get on top of them and get support at them, these are levels of support. I'm telling you. Use them. Don't use them. It doesn't bother me, but these are the things I look for to give me support to continue higher or lower. And I will cut through candles. I'll use shit back here that, that doesn't make sense. Why would you use that? It's a level of support. There we go. Just hit the 70% now. It's a level of support that helps me look for confluences on higher time frame, present time frame, to run higher. We couldn't get in here. That's off your order block here. If you would have got in here off of that, then you would have been underwater 1.4 pips before running up. Now you're getting into this thing here. So now our optimum trade entry to go short, if your overall objective is to go short, is inside here. Look at that fair value gap on that side, your BISI and your SIBI. So you look at this here level here, which coincides with the 50% point of that range there of your SIBI. So 75% seems to line up quite nicely there. But all we need, again, is just that little pop like we had here, little pop up. That's all you need, a little pop in there like that. That would be entry 1, entry 2, entry 3, stop loss here. Small with a small stop loss. So you can see that your leverage would be much stronger. You'd have a higher leverage being inside here because they're so close together and your stop loss is within range. It's really, really tight, so you can increase the leverage because you have less stop loss. So that guy just popped up in there. What's the high of this guy here? The high is 05179, and this one here is 05180. So that's 1 pipette. There you go. 1 pip above that. That gets you in and short. Where are we heading for? What's our first objective? Right here. Right here. Or if you're going to your next PD array, it would be this guy's threshold right here. Mind you, that's what? How many pips is that away? That's 7 pips again. Lucky number 7 today. Looks like 7s all around. You only need 1 pipette to get you in. That's right. So really slowing down on its propulsions here right now, right? So we've got this guy here. We're looking for, you take 7 out there and you take another, there's 12. It was 7 and 12 today. 7 and 12. Can you believe the precision we're getting today? This has been, this is exciting. Yeah, this is good. It's finally come to the top of that PD array right there. Now does he kick off of that? You just ran that guy out. You hit that PD array. Now is it going to go all the way back up again? That's why you got to think about PD array to PD array. And it doesn't necessarily mean premium and discount all the time. We're just coming back to balance price to continue moving up in the forward direction. Or do we blow through this and come back into here, give ourselves, then where are you thinking, Kevin? I want you to start thinking now, where would it go? If this was a new price leg, if this is a price leg extending up, and we get this is the same thing I kind of predicted for you in gold. This is what you're looking for. If this is the new high, and we get back to here, and this is the retracement, back into a logical level, off of an inversion gap, filling a fair value gap, to extend my reach, where would I go? I'd be reaching above these old highs here. I'd be reaching into 105.4. So that would be the upside objective. You see what I'm saying? Like that's how I kind of look at this, and I go, oh, if this is a price leg, if this continues to find support, where would I go? Yeah, above there, but how much further above that? Well, if that was a price leg, I could basically say I'm aiming for 105.46. So that'll be tomorrow's kind of a look back and see if I was right, or did we just continue down and clean out all this stuff here and eventually come back to our pretend Michael looking for over here. He wasn't doing this. We were just pretending. So is this a new price leg up? Or are we just going to reverse break through this? So in order for this to keep going down, I want to see this break through this, come back, find support at it, hit through here, maybe one more time in here before running down into this lower time frame or lower objective. So many nice setups on the big news day today. Yeah, it just shows you that there's still setups. Now, Michael says stay the hell out of this thing in the afternoon. We nibbled little pieces out in the morning, low leverage, paper traded it. We got some good returns today. We got into our, I still think this is going to come into here. I'd love to see that come into here and then push up for higher prices. That would be a really nice price leg. So with that, it's been 2 hours of you getting me rambling around in your ear there today. Again, congratulations, Kevin. Awesome work, buddy. I'm glad that you are going live on Monday with your funded account. Bless you for getting in and working the markets the way you have. And thanks again for keeping us all safe down there in New Jersey. Take care of all those bad guys. All right. With that, I'm going to check out for today. Keep your eye on this price here for upside if I'm right. And this is a new price leg. Look for higher prices above the market. And like and subscribe if you're people out there. And trust my buddy Kevin will tell you, we're having fun here every day on the Breakfast Club, having a good time, hooking up, having some, not hooking up, we're not hooking up. We're meeting up in the morning and enjoying ourselves, having a good time reading the market. No stress. You guys just pop in, say hi, and share your thoughts about where you're looking, where you're going, and let us help celebrate with you your success. Pay it forward. Help your fellow man. Stem the flow of hate out there, man. Love your fellow humans. We're all in this place just trying to make a living or trying to make an existence in a really tough world out there. So get together. We're all in it together, man. Love each other. Wish you all the best. And we'll see you again tomorrow in the Breakfast Club. And again, Kevin, welcome and congratulations, brother. We'll see you again tomorrow. And enjoy your day. Be safe, hey? See you tomorrow.